Hello, everybody. Welcome. Welcome to Tesla Live, Friday edition. Let's get started with the numbers real quick. Overall, markets are down today, 0.6% Dow Jones, 0.9% Nasdaq, and S&P 500, 0.6%. Russell 2000 is down 1%. Google is down 3%. Amazon is down 4% after earnings yesterday. Amazon, Google, and Microsoft announced slower growth on cloud services, which I think was unexpected by markets. Chip makers are down today. Nvidia is flat. Everybody else on the chip maker side is down. Broadcom, AMD, Qualcomm, Micron, Intel, Texas Instruments, etc., etc. Tesla is down a couple percent today. All right, let's go through the news. I want to keep this tight, limited to a 1 hour. And then we'll see if I want to do a subscriber on the space today. We did a couple of those today, this week. So this morning we got the employment numbers. Non-farm payrolls were up 143,000. Non-farm private payrolls were up 111,000, both lower than expected and significantly lower than prior. Last month's figure was it revised up to 307,000, and private payrolls were revised up to 273,000. So less than half of what it was in December. Average hourly earnings jumped 0.5%, and the annual year-to-year average hourly earnings jumped 4.1%, which is above what the Fed wants it to be, about 3%. Unemployment rate ticked down to 4.0%, indicating employment market is still pretty tight. Average work week dropped to 34.1 hours. And then on top of that, University of Michigan consumer sentiment preliminary reading for February, so this is the first reading for February, came in significantly lower than expected at 67.8, lower than the 71.3 expected and 71 prior. So still pretty tight employment market is indicated by hot wage growth, but the economy is not generating new jobs. The economy is not adding many new jobs, enough new jobs. So that's a problem. That's the problem for the potential growth of the economy. ACDC, any comments on economic data?
Um, I think it pretty much just tells us that at least for the time being, the Fed is going to stay put. So rates are going to be pretty steady here until at least June.
Yeah, that's what the market is showing. The Fed Watch tool, CME Fed Watch tool, the next Fed meeting is in 40 days, shows 94% probability of a no cut. And in May, which used to be 50-50, is now switched to 75 to 25%, 75% no cut. And June, even June is now 50-50. So the 50-50 shifted from March to May to June. And it's possible that the Fed doesn't cut this year. And that's obviously a possibility at this point. The probability priced into the markets is 18% of a no cut this year. 18%. So the markets are pricing 80% cut, one cut at least this year. All right. Any other comments on macroeconomy? There's one more thing I want to talk about macroeconomy because before we switch to Tesla, the University of Michigan inflation expectations jumped. University of Michigan Consumer Sentiment Survey. So let's read through this real quick. Consumer sentiment fell for the second straight month, dropping about 5% to reach its lowest reading in July since July 2024. The decrease was pervasive, with Republicans, independents, and Democrats all posting sentiment declines from January, along with consumers across age and wealth groups. Furthermore, all five index components deteriorated this month, led by a 12% slide in buying conditions for durables, in part due to a perception that it may be too late to avoid the negative impact of tariff policy. Expectations for personal finances sank about 6% from last month, again seen across all political affiliations, reaching its lowest level since October 2023. Many consumers appear worried that high inflation will return within the next year. Interviews for this release concluded on February 4th. So this is the first data point we get for February. So this is interesting. All five index components deteriorated last month, led by a 12% slide for buying conditions for durables, which obviously would be cars and the washing machines, etc. Now, this is the interest. The following is even more troubling. Year ahead inflation expectations jumped from 3.3% last month to 4.3% this month. So that's a big jump in year ahead inflation expectations. Let's continue. This is only the fifth time in 14 years we have seen such a large 1 month increase. So that's a big increase in inflation expectations. It's kind of interesting that I'll pin this at the top of our screens, this sentence right here. This is really interesting because in the last press conference, Powell said that inflation expectations remain well anchored. But there has been data, actually, especially in the survey data, that inflation expectations have been rising. This is only the fifth time in 14 years we've seen such a large 1 month increase, 1 percentage point or more in the year ahead inflation expectations. The current reading is now well above the 2.3 to 3% range seen in the 2 years prior to the pandemic. Long run inflation expectations ticked up from 3.2% last month to 3.3% this month. Long run inflation expectations remain elevated relative to the 2.2 to 2.6 range seen in the 2 years pre-pandemic. That's quite damning, I think. That's quite a problem for the Fed. ACDC, are you concerned about inflation expectations rising?
Not really. So, those numbers are off of the Michigan, consumer survey, right?
Mm-hmm.
And I think those are driven a lot by headline news also. And tariffs have been the hot topic for political reasons and otherwise too, right now in the consumers' minds, right? So if you were to take the two numbers and actually think about them rationally, if consumer sentiment and confidence is dipping to lows, then how is the consumer still expecting inflation to rise, right? Because consumer sentiment and confidence means low demand, they're less purchasing, right? And if you just look at the demand supply equation of it, that doesn't really add up to it. So I think this is really because of headline news around the tariff, and it could be true. I mean, just today, Trump announced that he's going to issue some more reciprocal tariffs today, make an announcement around that. So this could come true depending on how tariffs play out. And if they don't, then, it's just literally headline news right now.
Yeah, it's going to be interesting to see if the China negotiations play out as Canada and Mexico negotiations. Do you have any initial thoughts?
Yeah, I personally think that the China will also be resolved with negotiations itself. China is not in a strong economic environment where they can really, have any strength in bargaining here. They need us a lot more than we need them. We think we need them in terms of our all the goods that we buy from them, right? But in terms of economical sense, they need us a lot more. So I think with Trump's track record of being able to negotiate deals, I think China also ends up getting resolved.
Okay. Now, the survey-based inflation expectations are surging, but the market-based expectations are actually pretty tamed still. And I think that's what Powell was looking at. All right, let's see what else. BYD shares are up 20% on rumors of a smart driving tech breakthrough. This is according to Bloomberg and Wall Street Journal headlines. BYD shares are at record levels now, record levels. So let's read through this real quick. Bloomberg, BYD shares soar 21% this week as traders await autopilot updates. BYD shares recorded their best week since late 2020 as investor enthusiasm built ahead of the Chinese EV makers' keenly awaited update on smart driving technology. The company's Hong Kong listed stock gained 21% over 5 sessions, boosted by expectations that it will showcase progress on its autopilot system and introduce more intelligence features to its low price cars at an event scheduled on Monday. Autopilot system and introduce more intelligence features to its low-priced cars and an event scheduled on Monday. Any significant breakthrough in BYD's smart driving technology will likely further intensify competition in China's EV market, already the world's largest and where the Shenzhen-based firm is a leader. It may also help BYD's efforts to crack into new markets at a time when hefty tariffs on Chinese EVs imposed by the European Union and the US are hurting its outlook. BYD's acceleration of autopilot progress will have meaningful impact on the market, given its position as industry leader, and other players, especially mass market brands, will follow, Goldman Sachs noted. Adding that the bank expects BYD to share recent road test experience of its God's Eye autopilot system and new model pipelines. The race to develop and deploy assisted driving technologies is heating up in China, with EVs emerging as a key battleground. Car makers, in particular EV firms including Tesla and Xpeng, have invested heavily and attempted to convince consumers to choose their products, which could be safer and more convenient. The features have become a major selling point to some customers and a key differentiator for some of the car brands. While fully autonomous vehicles are not yet available, Chinese companies are pushing the boundaries. Many have deployed the assisted driving functions not only on highways, but also on more complicated urban roads. Interesting. Many have deployed the assistant driving function not only on highways, but also on more complicated urban roads. Startups including Neo and Xpeng are focusing on developing their own proprietary chips and software stacks, allowing for greater control and optimization systems. Furthermore, the integration of smart cabin technologies, including advanced AI assistants and interactive displays, are expected to enhance the overall driving experience. Yeah. So, despite all the false rhetoric out there, these guys, the Chinese automakers, are actually moving fast on autonomous technology. In fact, two of them apparently have already integrated DeepSeek as a voice assistant into their cars, which is pretty fast. I mean, that's a stunning development.
Wow, I didn't know that. Do you know which ones have used DeepSeek?
Geely is one. I forget the other one, but it's on
So this
the line.
so this is kind of like an in-car voice assistant that people are perhaps hoping Grok will do one day.
Right, exactly.
Wow.
Yeah.
Quick question on the Chinese autonomous technology. I know there's a restriction, with tariffs that they can't bring their cars into the U.S. But do you think there's any restrictions for the autonomous technology to also enter into the U.S.? I mean,
Yeah, I mean, the US, I think every government will protect its own automakers. Like this has been the case, and this is going to be the case. So I don't expect BYD to have any sort of market share in the US anytime soon, especially with Elon in White House. It's just not going to happen. And, we'll see what the repercussion may be for Tesla and elsewhere. But in countries where it's neither company's home base. BYD is taking a lot of market share from Tesla. So that's why you're kind of seeing, Tesla sales in Europe, in China, and international markets just kind of stall. And US is the only place where Tesla is seeing some growth.
Right, but I mean, we're not talking about, a full factory that they would have to make. I mean, we already know there's a lot of stuff that comes from China through Mexico, through Canada and such, right? So when it comes to technology, you could have a subsidiary set up and just transfer the autonomous part into that subsidiary. It could be based out of Canada, a new startup that supports legacy auto in making their cars more autonomous. So there's always loopholes that could be worked around. Like I said, I mean, this is technology. This is you know much much easier done.
Yeah. Um, how do you think the three main markets are going to play out for Tesla in the next year? China, Europe, and California.
Well, I think we're seeing some pushback right now because of political reasons. I think that eventually will kind of wither away. We've just had the election, we've just had the inauguration, and we're also seeing, Elon go to work with Doge and tear up a lot of, unnecessary expenses in the government, right? So that's not going to continue forever. And eventually, I think that dies down. Consumers start seeing rationality again. So I don't think it's like a permanent effect. But overall, I don't see it returning back to the same growth rate, and especially in China, I don't see. It's always boggled my mind why Tesla's even allowed in China, right? Like Tesla's got this huge benefit that the Chinese government is not really given to any other auto companies.
ACDC, if you can come up, let's YouTube crashed, unfortunately. I mean, the X Space crashed, unfortunately. I've never really had any problem with YouTube. Just X Space is just super buggy as usual. It's almost impossible to run any sort of space on X. They can't figure out these bugs. And this is the team that's supposed to bring us AGI. So, hey, ACDC, do these bugs, X Space bugs that make us crash every now and then unexpectedly, disrupt everything, give you confidence that we're about to get AGI?
Not really, but it seems to happen when I'm mentioning Tesla or something. So I don't know.
Yeah. Whenever we mention something negative about Tesla, the YouTube spaces crash.
And it's insane because I totally, I tried connecting back a couple times, but it doesn't, and it just kind of ruins everything because then for a few minutes people will try to reconnect, and if they don't find the space, and they'll probably just drop off, So
Yeah. It's a
that
joke.
definitely it is. I mean, they need to
A
fix this.
joke. US stocks fell on Friday after weak jobs data and the expectation of high inflation raised the chance of a more cautious Federal Reserve, while reports stating that President Trump might impose reciprocal tariffs added to worries. Why does he do this on a Friday? Like, why not do it on a Saturday? Why don't you make an announcement after markets are closed? You know? A survey showed US consumer sentiment dropped unexpectedly in February to a 7-month low, and inflation expectations rocketed, with households seeing inflation over the next year surging to 4.3%, the highest since November 2023. Yeah, I'm surprised you're not worried about these inflation expectations. Can you tell me again why you don't take these inflation expectations rising? Doesn't that tell you that interest rates will remain higher for longer?
Oh, I agree that that interest rates um, will remain higher, but I think because the Fed is in a wait and watch and wait kind of a scenario here. But what I'm saying is that this is more so headline connected and it's based on consumer surveys, right? So I think it has a little bit more effect from that. And I think we really have to kind of see how these tariffs play out to get a clearer picture.
Yeah. Yeah, today Kashkari was on CNBC and he was talking about how the Fed thinks about tariffs and like at a minimum, like you said, they have to kind of wait and see. But in the meantime, the rates are high, higher than neutral rate, so they're kind of they are a problem. Let me see if Amy wants to come up and Henry maybe give us a technical update. Tesla
So I'll
stock
just
has been plunging quite a bit. Sorry, go ahead.
I'll just say one thing. I think this is at this point of time, usually it's always like when the Fed speaks, when the president speaks, everybody wants to decipher everything, what was in the hidden language, this and that. I think where the Fed is in their statement right now is a really upfront and honest statement. They have said clearly that they're in a wait and watch scenario and they're
Hmm.
in no hurry to cut rates. But people just want to grab onto that scenario. And kind of like what you said about, Trump's, why doesn't he do this on Saturday? I don't know why people think that, he is there for the stock market itself. Okay. He's on a very serious agenda this time with the sole mission of cutting expenses and also cutting taxes, which he has, and he needs to cut expenses to be able to substantiate, the tax cuts that he'll be presenting soon. He has said clearly that there's going to be a little pain, but it'll be worth it. But people just somehow, I'm a total MAGA Trump supporter, but I'm not unrealistic about it. People are I had people tell me literally like as soon as Trump won, people are investing or inauguration happened and people are going all in, and I don't get that. I mean, that has nothing to do with it. And people just need to be more rational.
Yeah. Um, Kind of crazy with BYD surging 20%, huh? 21%, all-time highs. And this is a company that said just 2 years ago that autonomous driving was a pipe dream and that they were working on it. And now they're having a press conference about putting LiDAR into their $25,000 cars. Crazy. The bank Goldman Sachs XOX BYD to share the recent road test experience of its God's Eye autopilot system and new model pipelines.
They actually call that God's eye.
Yeah, in quotes, God's Eye. Interesting, right?
That
Newell,
that's
yeah.
pretty confident.
These moves across the stock market on some companies, I mean, they're so consistently up 20% or down 20%. Newell Brand down 28%, Affirm up 22%, Cloudflare up 20%, Pinterest up 20%, Elf Beauty down 20%. Man, this stock was 140 just last month, and now they're $70. That's crazy. Elf
Yeah.
Beauty, what the hell does it do?
So can I just speak to that quickly?
Mm-hmm. Mm-hmm.
What I'm seeing in the market sentiment change is, and it all started really with the whole DeepSeek. It seemed like it really deflated the sentiment hype, and people are very cautious now and really paying attention to the earnings and also guidance. It's no longer, you just mentioned the name AI and the stock goes up 20%. You can see this in Amazon's earnings. You can see this in Google's earnings report. They all beat earnings, but they did not really guide up a lot. But yet they also did increase their capex expenditures, and the market's not really. That tells you that the market really isn't sold on it. Like you're that it just shows that they themselves are not that confident that by increasing this capex, the correlation is straight to their earnings, and they cannot guide up by 20%, 30% more. So I think the market
Yeah.
sentiment has completely changed. That's why you're going to see stocks that are doing well and can guide upwards will perform well. And the others are going to pay the price. So you're going to see a lot of rotation within those high multiple stocks come into reasonable stocks around this time. And one quick thing on the Affirm that you just mentioned. I know we've been talking about credit card delinquencies and stuff, and like what? But wait a second, like how's the market still holding up? How's consumer demand still healthy? You know, well, this is kind of
I
one of
mean,
the reasons.
subprime credit was worsening in 2005, 6, 7, and the market kept going up. So just the first step. I mean, credit spreads are still very low. But I think market is moving in the direction. I think the recession is around the corner. Maybe it's a little too early, but
Well, yeah,
we'll
right.
see.
But if you look at the credit card debt and credit card delinquencies being at all-time highs, right?
Mhm.
But the consumers, you're not seeing that same correlation into the consumer. And part of that is because of a lot of this credit being transferred over to these fintechs like Affirm. So Affirm is the buy now, pay later, or pay in for. So this is not what's reported on the credit cards and stuff also. And this is something that's new. This has never been done before. And these companies, I mean, you look at Affirm reporting and that tells you that they're doing great. So a lot of people are actually buying now on the premise of paying later.
But
So
what if
this
they stop paying?
exactly. So this is a good thing for their stock, but it's not good news for the market in general
Hmm.
or the consumer strength.
Hmm. Yeah, Affirm is a $25 billion company with no earnings. The founder is a PayPal mafia guy, Max Levchin. 2,000 employees, $2 billion revenue. growing 40 to 50%, negative bottom line. Okay. Who is a firm disrupting exactly?
I'm not sure if they're disrupting any single one big player. There's a bunch of them that are in that. I mean, you can't buy anything without seeing a tab now for split it in four, pay later, and so on forth. I mean, you
So
could,
credit card companies, traditional credit card companies, Visa, MasterCard, American Express, Discover,
they are
issuers
taking a
like
share.
JP Morgan, Chase, Citibank of America, consumer finance and personal loan providers, Synchrony Financial, Capital One, Lending Club, other BNPL companies, PayPal Credit, Afterpay, retail financing programs like store credit cards, and traditional banks and fintech lenders like Wells Fargo, Goldman Sachs, SoFi. SoFi, a firm is disrupting SoFi. I thought SoFi was a disruptor. Yeah. Let's see the news from a firm.
There's a big bubble forming in the fintech. I'll just say that.
Yeah. Price profit as customer base jumps. Okay. A firm holding spikes on Q2 double beat strong 2025 guidance. Let's read this real quick. Shares of a firm soared 18% on Friday, a day after the provider of buy now, pay later loans posted a surprise profit as the number of its customers soared. Financial firm reported fiscal 2025 second quarter earnings EPS of 23 cents, while analysts surveyed by Visible Alpha were looking for a loss of 10 cents. Revenue jumped nearly 47%, also better than forecasts. A firm active customer base increased 19% to 21 million, more than anticipated, and transactions per active customer were up more than 20% to 5.3. Gross merchandise volume, also known as gross merchandise value, grew 35% to 10.1 billion, beating forecasts. Founder and CEO Max Levchin wrote to shareholders that Affirm had another record-setting holiday shopping season as we once again delivered for our merchants with several standout categories. Levchin added that even though the company is 5 months away from its target date to have positive operating income, we are nearly there today, market zero. Actual operating loss in the period was 4.3 million, down from 172 million a year earlier. Okay. Um, Revenue of about $2.5 $3 billion and market cap of about 25 billion. So 10x revenue. And I mean, still not Palantir levels, but um, yeah. Palantir PE ratio of more than 600, and forward PE is about a few hundred to few hundred x. How about that? We're talking about PE ratios in a few hundreds. Crazy. What can a firm do that others can't do, ACDC?
Well, Affirm is more like for your online purchases, right? So when you go to retail outlets and stuff, you're not using that. You're using your cards. But Affirm basically is plugged into your online purchases where your card could be maxed out, but you still need to buy that $800 phone, or I'm sorry, $1,600 phone, and you can break that payment into four, or do a pay later plan with them.
Hmm.
So that's what's attracting the consumer. That's why more users have gravitated towards them. You know, and they'll when you divide the payments in four, there's no interest,
Hmm.
right? So if you were to put it onto a credit card and your credit card still has a revolving balance, you're paying very high credit card rates. But then you
Hmm.
have to come back 4 months later and then pay them. Otherwise, then you go into that really high 30% interest rate. So they're kind of playing on this and benefiting from the squeeze of the consumer, I think. And that's why they're attracting it. But it's a very risky consumer. It's a very risky balance sheet. And the slightest downturn in the economy can literally topple a model like this.
Hmm. Yeah. No late fees ever. Unlike credit cards and many BNPL rivals, Affirm doesn't charge late fees. This appeals to consumers tired of hidden costs and punitive fee structures. Flexible repayment options. Affirm offers a wide range of payment plans, from short-term interest-free options to longer-term loans with fixed interest rates. Competitors like Afterpay focus mostly on 4 installment plans, limited flexibility. Advanced underwriting with real-time data. Affirm's proprietary underwriting technology evaluates creditworthiness using real-time data, not just FICO scores. This allows them to approve more users responsibly, even those with limited credit history. FICO is the company, right? FICO is the publicly traded company, I think. Fair Isaac Corporation. And their stock has been surging. Um, Actually, down 20%. But before that, they went up in 22, 2023. They went up like 4 or 5 times. So this could be a problem I guess they don't use FICO scores. So not just FICO scores. Okay. This allows them to approve more users responsibly, even those with limited credit history. Deep integration with major retailers. Affirms exclusive partnerships with Amazon, Peloton, and Shopify provides seamless financing options like checkout embedded directly into the shopping experience. Few BNPL providers have this level of integration with such high-profile brands. Transparent and fixed interest rates. Affirm clearly shows the total cost upfront, no compounding interest, hidden fees, or surprises. This level of transparency is rare in both traditional credit and among some BNPL competitors. High ticket purchase capability. While competitors like Afterpay and Klarna focus on small to mid-sized purchases, Affirm can finance large transactions, including fitness equipment and even travel. Expedia knows some really good earnings too, by the way. We can take a look at that. Affirm Card bridges the gap between BNPL and traditional credit cards. Okay. Interest-free and interest-bearing options, and focus on financial wellness. Okay. I don't know. Do they have any sort of kind of? Do they lend to everybody, or do they have a kind of a high credit, average credit score?
I'm not sure if they. What do you mean? Are you saying do they land outside of the buy now pay later?
Yeah. No, what's the minimum credit score that one needs to qualify for an Affirm BNPL?
I'm not sure. I frankly have never
It
used
doesn't
it.
have a strict minimum credit score requirement to qualify for it. Instead, it uses a proprietary underwriting algorithm that considers multiple factors. One, credit history. Two, income and debt income ratio. Three, transaction details. And four, Affirm usage history. If you use Affirm and pay on time, then the history increases your approval chances. So, I mean, this is very similar to a credit score. Like, what's the difference here between? I don't quite understand here what the value
Yeah, I don't
proposition
understand
is.
how could if you're pulling up credit history, you're pretty much pulling up credit score.
Right. Right, exactly. And
or
it's
at
not
least the
like
same metrics that go into the credit score. So
exactly. It's not like, all credit companies just use the credit score. They do look at your credit history, you know. I don't know. There's some claim of a proprietary algorithm, but um like everything else here is the same. Income and debt ratio, transaction, they focus on the repayment history, not just the score itself. Okay. Ford stock is at 928. Wow. This is the lowest level since COVID. And that was the lowest level since Great Recession. So Ford is in a bad situation. ACDC, if someone put a gun to your face and said, short Palantir, um, but you have time to do so, when would you do it? What would you look for?
I would look at a technical basis to enter that short. I would look for it to kind of go below its 50-day moving average, and that's when I would consider it. And right now, it's healthily above it, and it's being carried by momentum, so I wouldn't touch it.
Yeah, it really is crazy. I mean, the company is trading at like 100x revenue multiple. Have we ever seen that before? Has that ever happened before? 100x revenue for a multi-billion-dollar company.
Yeah, it's insane. You know, and there's a lot of hype around it. I mean, you think there's Tesla hype, but this hype is like real. Like this is more like, let's just say Tesla hype is built around, okay, robo taxis rolling around everywhere next year, robots in home, and so on forth. But you're talking about Palantir displacing defense contracts now,
Hmm.
right? So it's like a much more realistic hype. I'm not saying that it's real, but that hype is a lot more real. So that's what's kept it up here and may take it even higher.
Yeah. NVIDIA, as of mid 2024, NVIDIA forward PS ratio reached approximately 19, mid 2024. At least that doesn't even come close to where Palantir is. Actually, no, that's not true. Hold on a second. Yeah, it doesn't even come close. And then S&P 500 technology sector in mid 2024 had a PS ratio of 10x. Let's see. What about 1999 tech bubble? Several large cap companies reach extraordinarily high PS ratios. Here are some of the notable ones. Cisco peaked around 30 times in early 2020, in early 2000. Cisco was briefly the most valuable company in the world, fueled by expectations of endless growth in networking hardware. Oracle peaked around 25 times during the bubble. Sun Microsystems had a 15 to 20 times peak. Qualcomm surged to over 80 times in 1999 after announcing significant advancements in CDMA technology. This was one of the highest PS ratios ever for a large cap company, reflecting extreme investor euphoria. Wow. Yahoo peaked around 70 times. Amazon approached 45 to 50 times during the peak of the bubble. eBay touched around 35 times. GDS Uniphase, never ever heard of them before, soared to over 100 times, possibly one of the highest ever recorded. Have you ever heard of JDS Uniphase?
Oh yes, it was the darling of that time.
Really?
And yeah, there's a lot of companies. So I don't know if you got this from ChatGPT, but this seems
Hmm.
like more of the prominent companies which were already around, and most of them, apart from like Yahoo, they're still around. But there were a ton of companies: JDS, Uniphase, Metro Media, Fiber. These companies were, going to be the next disruptors. There was going to be fiber everywhere. Which, yeah, of course, fiber ended up being everywhere, but the companies didn't, right? So that's the other thing, and that's the disconnect that people kind of lose. And it was the same thing around
Yeah.
.com. JDS Uniface was more in the infrastructure of the internet, but there was a lot of B2B players that had entered, business to business, e-commerce players who had entered, and you saw some crazy, crazy valuations. I was trying to recall some of the names. I'll see if I can come up with some, but those companies no longer exist anymore.
Yeah, I guess the only one that's still around that reached those extreme PS ratios is Qualcomm. So if I look at Qualcomm stock back in 1999, oh my gosh, look at this rise. It's vertical. It went vertical. That's crazy. Up 2,200% from mid 1998 to January 2000. Wow. So 30 times kind of thing. I mean, I'm just seeing the closing price here. I'm sure the high went to like some extreme price too. That's so wild. That's so crazy.
And you know why that was, Yaman? Because
Hmm,
that was the first time internet was coming to your phone,
right.
right? So it was all about, I mean, Qualcomm has been, the driver of the CDMA technology that was at that time. So it was everything about Qualcomm.
Hmm. I mean, yeah. I mean, Palantir is almost there. 100 times revenue multiple. That's crazy. That's so wild. I don't know.
And that's, in my opinion, so that's exactly when I started in this business. So I was in banking in '97, and I did that for 2 years, and I started my brokerage career in '99. So I saw those 3 years of that market, and the lessons that I learned, people have forgotten them, right? Investors forget very easily.
Tell
I
us
have
about
kept
it.
I have kept those lessons to my heart. Well, the biggest lesson is that it's a technology doesn't go away. So AI will not go away. Full self-driving will not go away. But a lot of the valuations and some of the companies that are behind it can completely get wiped out. And at the end of the day, valuations always matter and they always catch up.
Yeah. JDS Uniface. Wow. Do you think Palantir Management has an obligation here or a responsibility to issue equity at these prices?
Do they have an obligation to who?
The responsibility, not an obligation, but the responsibility as fiduciaries of the company to raise capital basically at these absurd prices.
Well, of course, because they can justify that fiduciary capacity, right? It's
Mhm.
for R&D, it's for expansion, it's for everything. So in fact, if they didn't, it could be a breach of fiduciary capacity. So it's the way you look at it, right?
Mhm.
And it was the same exact thing at that time. And all of these analysts, what people don't understand, who come out with support for all these business models and these high valuations and everything, they benefit from it. They benefited from it at that time, and they still do. You can say the Sarbanes Oxley and everything, the Iron Curtain between research and capital markets and all that. Yeah, that's there for the name of it. These people, it also goes to the same bottom line of these big banks.
Yeah, exactly. Qualcomm, approximately 80x in 1999. Um, Surged due to advancements in CDMA technology and the broad enthusiasm for telecom. Zoom, Zoom got to 178 in 2020. How about that? I did not know that. Snowflake, this can't be true. Snowflake, approximately 268 times in 2020. I don't think that's true. I think these are wrong numbers. I think Snowflake, I thought the highest that got to is 50. What are they talking about here? Or is that 50 forward and 268 past or something? Let's see.
Wait, are you talking about the PE on Snowflake or the price?
Yeah, it's price to sales revenue multiple. Let's see. Looks like 150 times in January 3rd, 2021. So maybe it did get that high.
Yeah, it was nearly a $400 stock.
Okay, let's see. Today's 18. What was Snowflake's price to sales ratio in 2020? 183 in December 2020. This was an all-time high for the company. I mean, Palantir can continue to run, you know, it's still possible to continue to run here. And wow. I mean, if that would be crazy if it got to like 200x PS ratio, double from here.
This time around, what I'm seeing, as opposed to 2000, is that the hype is that much worse. Because back in 2000, like I told you, internet was just coming to your phone. Now you can trade stocks soon enough 24/7 on your phone. You have all the information on your phone. You have groups specially created around stocks on social media platforms. So all of this wasn't there. There was some wealthy people who had some capital who got wiped out during that time, and I'm talking about like doctors. I had clients, I had surgeons who literally traded their pension plans to zero over those stocks. Those people have kind of, for the most part, learned, but I see a lot of young investors who have never seen that before, a true market correction. This time it's always been buy the dip and it's worked for them, right? And I think in this time around, the young investors are the ones who are going to get hurt the most.
Yeah, I think so. I think so. Palantir is up 15 times since May 2023. 15 times since May 2023. And up 6 times since early 2024. Wow. Okay. Maybe Henry can come up and tell us about Tesla's technical analysis or Palantir, what to look for before you short Palantir into the technical analysis. Palantir technicals are still looking up on a 1 day basis. Even on an hourly basis, it's looking pretty good. That's wild. That's so crazy.
I think I spooked Henry. He's busy selling right now.
Maybe. Tesla is at $367 per share, $1.15 trillion company. Generates the same free cash flow as Ford, $4 or $5 billion free cash flow. And I think energy business margins are going to be lower than people expect in China, maybe potentially zero actually. And even after the ramp, Shanghai factory ramp. And FSD uptake, FSD unsupervised, I think is some time away. Robotaxis are years away. So I wouldn't be surprised if Tesla drops as much as all the way down to $200 billion. So 80% drop from here. What do you think the lowest price you can see ACDC before I go to Henry?
Lowest price on Tesla.
Tesla. Yeah.
I can see it go to 300, by the mid of the year. Um, I think it could touch 300 after first quarter earnings itself. And depending on what comes out then with the rollout in the Austin market with the robotaxi and whatnot, any hiccup, right? So it's priced for perfection. So now it has to perform to all those benchmarks. And any hiccup in that can take the stock considerably lower. And I can see it return back to even closer to 200 or lower by the year end if there are more hiccups than success.
Yeah. Yeah, I didn't realize Bitcoin was back to $97,000. Look at that. Actually, just a few days ago, it went all the way down to 92,000. Hi, Henry, how are you?
Hey, Aman, how are you? How's everyone?
Everyone's good. I'm good. What do you expect from about Tesla's technicals from here? Tesla's price action.
Yeah, the price action is a lot more uh smoother in terms of flow, not the velocity of the drops or anything, but just the flow has been a lot more constructive. If you look at from its highs of 488 till now, there are two major times during this window where there was some buy side, actually sell side liquidity, and then those eventually uh, ended up being lower highs. So that's from a technical perspective, from 488-ish till now. Um, it was met with resistance and resulted in lower highs. Uh, since we last spoke, the flow has improved, and I'm not talking about directional from a directional perspective. Obviously, today it's going down, but the flow is suggesting that there's no liquidity grabs per se. It's testing liquidity levels, but uh, the overwhelming action we could describe it as is its distribution. People are selling. There's lack of buyers or traders for that matter taking stabs at it with volume, with size, and then when it drops and goes below certain key levels, you don't see uh, panic sell orders. So there's no, I don't, I see there's relative to the last time we spoke, there's less short sellers. Because even today, there were opportunities where they tried to move it back up, but the return back down wasn't as disorderly per se. So that's my perspective on it right now. Oh, I'll say this: if Tesla finds footing here, uh, it could close, let's say, above the 370. That would be constructive. There is potential for Tesla to retake 400, and if it takes out 410 and trades around there for even a day, that would be constructive. It has the potential to go back up to the 450s, but there is supply up there. So w- if we go back several years, when it first reached its 415, 416 all-time high, it took literally weeks and weeks for it to show the regular day, average day trader who's not been in the market that long, that the direction is definitely going down. Um, and I only add that because what ACDC mentioned about JDS Uniphase, all those high flyers in the past, uh, would it be surprising that Tesla goes back up to 450, even 460s, 470s, and then barring any mm, positive news from the company in the coming weeks and months, would it be surprising that it drops back down to this level? No, I don't think so. So right now, I think for those long-term investors, dollar cost averaging is great because it's way down from its 488. A year from now, 2 years from now, when we have a clearer picture on unsupervised FSD, robotaxi, assuming everything falls into place, then buying it at 360 versus 450, it wouldn't really matter too much in my humble opinion, because if Tesla is valued at, let's say, 1 trillion or 1.3 trillion, and it goes, the valuation goes above 2 trillion 2 3 years from now, um dollar cost averaging works. Swing traders, I would say, right now it broke that recent support, so it wouldn't be a good opportunity for swing traders to bank on 400. Um, for day traders, the only direction I see right now is earlier this morning, taking stab at bounces, and if you're really aggressive, shorting it. I personally don't like to short Tesla too much because the move back up is just mind-boggling. So that's my technical take on Tesla. Just be careful,
Thank you,
conservative.
Henry.
Yeah,
What's the lowest price do you think you can see this year?
yeah, I heard that question from ACDC answering at 300. I'm similar. I see where the in 2022, uh, in mid-year, it hit the bottom, intermediate bottom around June, tested back up to 300, and then we all know what happened at the towards the end of 2023 when it hit close to 100. Uh, Fast forward to mid 2023 again, it went from 100 and tested 300. So I preface that because 300 over the long term, over a couple of years, that has been a level of interest. Um, we're we're gravitating towards that, back to that direction. So if there's an extreme, it cracks 330 and trades below that, and there's no positive news from the company. There's macro headwinds from an economic perspective. Uh, $30 from there is very feasible. So I would agree, 300. It would be very interesting to see how it reacts around 300. They may shake people out, bring it back to 280 even.
Okay. Well, I'll bet you guys that the Tesla stock, ACDC, I'll bet you that the Tesla stock will drop below 300 this year.
I agree with you. I said 300. You could see 300 after Q1 earnings.
I'll bet you that it'll drop to 280.
I believe that too. I thought I said
Okay,
that.
fine. 250. How about 250?
Wow, somebody wants a coffee.
My systolic pressure is a little low. I need some coffee.
Yeah, no, I like I said, between the market pullback and some of the, you know, benchmarks that they have to meet this year, lofty ones, you could easily see 200. So no, I'm not gonna give up that coffee that easy.
Oh, okay. Um, Fine. Henry, what about Palantir? Are you trading Palantir? Are you looking into it? There's a lot of activity there.
Yeah, man, yeah, I did trade. I am trading Palantir on the long end. Right now is anyone shorting has a death wish. The price action since it announced, so starting from the afternoon that it announced till now, any size on the offer is being blown through like slicing through warm butter. So there's a lot of conviction to the upside. That's very obvious in terms of day to day. Even if you look at it from day to day, I know your question to ACDC was like, how, from a technical or trader's perspective, when would you short this? Uh, a lot of people say blow off tops, but I'll be a little bit more specific on that. The first day that it has some sort of um, price action outside the ATR, um, simply I would, I mean, this is kind of like a cookie cutter um, opinion on it, but draw 50% of fib retracement, so basically 50% from top to the bottom of that range. And if it stays below that 50%, you can even draw an anchored VWAP for those who are more familiar with anchored VWAPs. And if it trades above those levels, then that would be your stop loss. That would be a very simple way of looking at how to short Palantir when we cross that bridge. But just to take stabs at it randomly right now is you there's no edge on that on the short side.
Okay, can you tell? Sorry, can you say the what you're watching for again, please?
So
Just
and
the
you
last part.
right. So if you look at Palantir and I think there's even technical tools in TradingView if for those who have it. You plot an average true range. You can even go crude and put it on Excel if you want. But basically, if the average true range for Palantir is, let's say, uh, $5 to $10, and we have a first day that it goes above that range. So let's say goes down more than $10, and you see there's some pressure on there. It's not just a quick bounce. Then you would draw an anchored VWAP or look at it how it trades if and when it bounces, and if it retraces 50% of that move and it holds there and it trades up, you know you need to stop out. But if you're short and it even hits that 50% and still feels weak, you could hold on to that short. And that's the only way I know to share with
Okay.
the folks here, when to
AC,
kind of look at it from a short perspective.
ACDC, are you taking notes?
I'm trying to take notes, but I
Yeah.
have a couple of questions while I'm doing so. Henry, your technical analysis, um, am I presuming this correctly that you are more like a short-term trader, like you're taking day positions, not even like week out, right? Is that what you're using this analysis for, right?
Yeah, I have a core position in Palantir uh, that allows me to have that day-to-day action, uh, that capability of doing that. Um, but Palantir has been pretty easy to trade on the upside, from a day trade, from a swing trade. It, yeah, Palantir is very it has a cult-like following. Like I don't understand it. I hear you guys talking about the fundamentals, and I heard the earnings call and the pundits on TV. I kind of agree that 100 plus times forward sales is like what would I'm curious what would Tesla would have to be on the same valuation just to give people perspective, like How much would Tesla be if it's valued just like Palantir right now?
Um, I don't want to talk about it, but you're looking at like $10 trillion valuation.
So, your listeners can see and hear, not see, but hear that, that's kind of where we are with Palantir. It's uh, it's crazy. But you know what? Market participants need to make money, either in the long side or the short side. Fundamentals, like I totally agree with you guys, especially ACDC. I didn't know you went back that far, but valuations eventually catch up. It's that momentum, that fear and greed in the interim, in that short period, that really drives the markets. But eventually, companies go back to its fundamentals. That's what I agree.
Okay.
That's such a valid point by Henry. And I think that's what people have to realize, the difference, right? If you're buying for the long term using fundamentals, or are you trading the momentum? I mean, Henry is a long-term holder of Tesla, but he's also a short-term trader of that. So he completely understands that. I don't think a lot of people understand that. They get those two confused.
Yeah, I think new traders or investors uh, should really value one share, meaning that one share, if Tesla moves $50, that's $50. But if you trade with 100 shares and you lose $5,000, it- who's better at trading? That guy who traded one share or that guy who traded with 100 shares? So you have to know your time frame.
Okay. Yeah, I was just looking at the Zoom's revenue back in third quarter of 2020 was about $777 million. Third quarter of fiscal 2021. Wait, that doesn't make any sense. Let me see. Oh, yeah, they're a weird fiscal schedule. Okay, makes sense. Third quarter total revenue 777 million, up 367% year over year. I mean, when Zoom had this level of price to sales ratio, they were growing hundreds of percents year over year, which obviously Palantir is not. And this is crazy.
I I think they were growing by users, but I don't think they were growing by revenue. If you
That's what
remember,
I'm looking at their press release right now. Revenue up 367% year over year. This is Zoom's um, press release, November 30th, 2020. And they have the same stats as Palantir does. Number of customers contributed more than $100,000 in TTM revenue, up 136% year over year. Approximately 433,000 customers with more than 10 employees, up 485% year over year. Just the percentages are much lower with Palantir, like 10x lower. And yet they have about the same price to sales ratio here. Man, amazing. Really amazing.
and Zoom's come back to earth now. Zoom trades at 28 times earnings and actually
Hmm.
only 15 times forward earnings.
Hmm. Right. But after it plunged, they peaked March 22. No, sorry, that's not it. Hold on 1 second. Zoom peaked October 16, 2020. So end of October. And it came down about 90% after that in about a year and a half, 2 years. Yeah, I don't know.
Yeah, man, did you see the news on Uber?
Yeah, the Bill Ackman you're talking about.
Yeah, I mean, that's a big statement, and that's why this isn't on earnings or anything. Earnings, I think, were a couple days ago.
Hmm.
But this is a big reinforcement from Bill Ackman, who, by the way, knows Elon better than a lot
Seriously.
of people,
Hmm.
and he's has spoken, and so he knows about robotaxis, he knows about FSD, he knows about all the potential of it, and if he wants to know anything more, he can pick up the phone and call Elon and ask him about that. But he chose to invest in Uber, right? So,
Right.
and I heard a lot of people kind of talk about it and the validity. And we were just literally talking about this, I think 2 days ago, when I said that
Hmm.
I'm actually looking at it. I wish I had looked at it a
Hmm.
little bit more seriously at that time,
Hmm.
because the infrastructure that they have, robotaxi is not just a technology play, but it's a logistics play. And Uber has perfected the logistics part of it. So it's not like a company can just come in and just disrupt that instantly while they're still trying to solve the technology, and the hardware and the cars and everything else.
Yeah, I agree. I agree. I mean, we talked about how much free cash flow they generate, and yeah, it's crazy. I mean, the hype around robotaxis has gotten out of hand, and Waymo is using them. I mean, Waymo is partnered with Uber now in multiple cities. So, Palantir was as low as $40 per share. Now they're close to, so almost tripled in 1 to 3 months. I think this is they're at the end of the road here on the Times revenue. Um, yeah, I think they're at the end of the road.
I think I would also like to highlight this, that what people are not seeing as a big risk to the FSD component of Tesla, which kind of like their entire long-term thesis depends on, is look what DeepSeek just did to AI. You can dispute whatever cost of it or not, but it commoditized all of these LLMs. And that is what will happen, kind of like what you were saying, with um, BYD using DeepSeek already. So by the time we get to this, FSD technology, no matter where it comes from, it could be commoditized to the extent that the margins are not even there anymore. The margins that we're basing the $1,000, the 5 trillion valuation on.
Right. Okay. All right. Well, I put a limit order for Palantir short. Let's see if it hits. We'll see. I have a few limit orders to add to my short positions. I feel pretty good about my position so far, but no, I'm not going to push it from here. Okay. Anything else we got to talk about? Let's see if there are any headlines from Mr. Trump. Trump administration orders states to halt EV charging programs. Okay.
That could actually be a benefit to Tesla because a lot of those charging stations could end up going to Tesla.
Yeah. EU lowers car tariffs to avert US trade war. The European Union has decided to lower tariffs on American car imports as a strategic move to prevent a trade war with the US. This action follows tariff threats made by the President Trump. Bernard Lange, a senior EU lawmaker, has indicated that the EU's offer aims to avoid conflict and promote a more cooperative trade relationship. The reduction of EU's import tax from 10% to closer to the 2.5% charged by the US is designed to foster mutual economic benefits. Interesting. Interesting. I mean, Tesla doesn't export any cars from anymore from US to Europe, so I'm not sure how many car makers they honestly. Tesla has its factory, and the demand for Teslas in Europe is limited anyway. All right, let's see what else. Any other? Steven, welcome.
Hey, what's going on?
How are you?
Good. What'd you think of the jobs report?
Oh, someone just tipped $10 via Cash App. Look at that. Peanut butter jelly time. Thank you for the tip, guys. If you want to tip, you can do so through the tip button on my X profile, or you can subscribe. I now have a dozen subscribers. So these subscriber only spaces, I think, will proliferate going forward, which I really appreciate. Steven, sorry, what was the question? The jobs report?
Yeah.
It's obviously lower jobs added than expected. Although January was, man, these numbers, like jobs reports adjusted so much. It's crazy. Even after a year, it's adjusted so much. It's almost like, a totally different picture they paint a year after the report is released. So what's the point of looking at these things, honestly? But the average wage growth, 4.1%, up from 3.8% year over year, from December to January is, I think, significant. And then the unemployment rate is 4.0. So Bill Wabufo has been right. The jobs, wages are growing. The employment tax receipts that he tracks appears to be a strong indicator of what's actually happening. And then initial weekly claims being low is, says to me the employment market isn't falling off a cliff just yet. What did you think?
Yeah, almost the exact same thing. Although I think it's notable if the jobs, kind of like you said, the people were talking last January about how there wasn't really any soft landing, but then after you take all the revisions down, it seems like the job market did cool off in the middle of last year. But yeah, I think the economy just continues to chug along, and I don't think it's necessarily slowing. I think inflation still is a little elevated, not super elevated, but I don't really expect any cuts to the Fed funds rate, at least in the first 6 months of this year. I don't know what the market expectations are for it right now, but
Yeah, that's the same.
okay.
No cuts until at least June, and the probability of a cut this year is 18%. So the market thinks one cut this year, still one
Yeah.
to two cuts, but later in the second half, they say.
Yeah, I think those are like decent decent expectations.
Hmm.
I think all the survey data is stupid, and it's funny seeing how like there's the stuff today that came out showing inflation expectations and how like it fell for Republicans, but then it jumped for Democrats because there's a different president in power. And I think we saw the same similar things last time that Biden took over. So I don't really trust very much that survey data, but it is notable that it jumped. But I think a lot of it is just politics.
Yeah. Okay. Um, you still don't think there's a recession this year?
No, and I'd say expectations are about the same. Maybe I mean I think there's still a chance, like 10 or 15% chance probably.
Hmm.
What about you? Has your expectations changed at all?
No, about the same. I mean, obviously, yeah, it doesn't look like we have a recession right now. Um, so I would lower my probability of recession happening starting now to like in Q1 to closer to zero, and then, but it by the end of this year, I think we're gonna get one. I mean, that man, that it sounds so much like Elon Musk now. By the end of this year, it'll happen. By the end of this year, it will happen.
he did say the Fed needed to cut in May or March of 2022, otherwise there was going to be a really bad recession. So
Yeah.
he's predicted 12 out of the last two recessions, or
he
whatever that
also he
trade
also
goes.
predicted deflation. Remember?
Yeah, and this is a side tangent, but I remember on one of the calls, I don't know if it's him or like somebody in the Tesla community that said he had more real time access to anything in the
Right.
economy or something
It
like
was
that.
it wasn't me. I was actually arguing the other side. I was saying he does have some real time access, but it's really about his own like car industry and maybe a few of the suppliers, and that's it. Like, and maybe like some X data, but that's more social media engagement stuff. I mean, what else? Like SpaceX doesn't have any sort of industry, you know, early indication stuff. Right? They're not even that big, so production wise. So it
Yeah,
doesn't
I
have
would
anything
take.
else. I mean, Neuralink is going to be some sort of like, so that was nonsense. There's a lot of nonsense in the
I mean,
Tesla
it's
community,
like
unfortunately.
think about somebody like J.P. Morgan,
Yeah,
Jamie
exactly.
Dimon. Like
Exactly.
he has all sorts of money flowing stuff, and he's able to monitor like money flowing, credit card activity, things like that, and he still can't predict a recession very well. Like he was very cautious, I think, in fall of 2023 that we were headed towards a recession, and
Yeah.
so predicting recession's hard.
Yeah.
Really, any predictions are hard.
Okay. Um, what about home prices? Home prices are looks like they're peaking now.
Well, they still haven't gotten above the June 2022 levels on a real basis. I think they maybe have on a nominal basis, or at least I know they have on a nominal basis. Um, but yeah, it'll be interesting to see with rates kind of staying this high, how much inventory comes to the market, um, new inventory as far as like both used and existing. So watching that, I'm starting to watch some of the construction and labor data because if rates do stay high for a while, all the multifamily units that will be completed last year and this year, you would think that would cause construction workers and stuff to be laid off, and I would assume that would be some of the first cracks we'd see. And we don't see that yet. So
No, we don't see that yet. You're right. It's really interesting. But I mean, that tells me that the interest rates will stay higher for longer, like you said. And obviously that's not good for interest sensitive companies. Like demand, like the economy overall may be less interest rate sensitive, but the industries where lending, borrowing is prominent to buying something like houses and cars, that's a big problem. That's a really big problem.
yeah, and I think one of the points that I don't know if I made this before, but I've been thinking about this the last 6 to 8 weeks. I think more things will become the economy will become more sensitive to interest rates as time passes because the amount of companies and people that refinance debt in 2020 and 2021. So if you think about like car loans and things like that and mortgages that people got at really low rates, eventually cars need to be replaced and people move and things like that. So as that happens, I think more and more people will become more sensitive to what current levels of interest rates are at. Have you
But
seen that?
as a car company, you can't do that,
What's
right?
that?
As a car company, you can't be insensitive to where the interest rates are.
No, you have. Well, yeah, you have to be. Like your business is sensitive to changes in rates.
Mhm. What do you think about Palantir?
I don't have any opinion on it.
Really? You wouldn't short it.
No, I work in IT, but I haven't spent much time looking at like their actual business and stuff. I know people. It seems like Nvidia is not moving as much anymore, so people are looking for some other stock to talk about, and it seems like Palantir is the one. So maybe I'll look into it. But are you short it?
Well, I closed my position for a small loss, but that's because I figured it was going to keep going higher for the near term. And I mean, I think there's no question the company's overvalued at these prices. I mean, this is ridiculous. But I'm trying to see if I should short it again. I have a little bit of dry powder. I have 4 ideas for additional short, and Palantir is one of them. And I have limit orders for all of them placed.
What about the rest? What's like? I haven't been able to hop on very much recently, but what's like the status of like what other short positions you have open right now, or do you share that? Or
Yeah. I mean, Tesla's one of them. I still have Tesla short. Nvidia is another. Um, and Carvana is another. Um, but yeah, there's a couple more. So
if you could only keep one or two of the shorts, which companies are you most confident in your short position in?
I don't know. I'm trying not to do that. I don't want to like. I want to do portfolio management, prudent portfolio management. How about that? By shorting, I don't want to do like one or two. I'm kind of get married to one or two ideas anymore.
I feel like that's a really
So
good idea.
yeah, so I have limit orders for a few ideas. One of them is actually pretty close to hitting, but we'll see. We'll see.
You could just like sell a call on it and get even better pricing.
Yeah, right. But it's not the same idea. Okay. Um, what do you think about University of Michigan consumer sentiment sinking month after month?
I think a lot of that is just reflected to how the market's performed and the market
Well, that's
had.
not true because S&P 500 has been pretty stable in the last, say, 3 months.
Is it a survey?
Hmm.
Well, yeah, I'd say it's politics then. Because I assume at the same is that right around the time the small business report comes out? The um, like usually right around when Trump got elected last time, like the small business optimism index, whatever that's called, spiked, and I assume that'd be similar, where small businesses are more optimistic than what they were before, but maybe some Democrats and stuff like that are more upset with the direction of the country, so sentiment drops.
Yeah.
I will say though, it does seem like obviously the market can do whatever it wants, but I have been kind of surprised by some of these reactions the last couple Mondays to stuff that Trump says or does. It seems like not that many people learned from what happened in 2016, where there's all these over market reactions and then kind of things settle out. So it does seem like there is a large appetite for people to flee to safety names or things like that. So I guess maybe I'm just trying to say the market seems very, very skittish for not a lot of tons of stuff happening under the hood.
Yeah, it does seem a little skittish. Exactly. Like, especially some of these chip makers kind of pumping and dumping after hours is quite interesting, you know? And these are not small companies like AMD going up a couple percent and sinking 5% out of nowhere, or Qualcomm, going up and then sinking. And a couple others did the same thing. It's kind of surprising, honestly.
Like I think all of that. I don't know what it's attributed to, but um, I have noticed that behavior, and that's why I'd attribute similar behavior to even Nvidia, where I don't think it's just um, what China may or may not be able to do. I think it's just kind of
All right.
reflective of the market as a whole right now.
Yeah, exactly. AMD is down 12% from that initial pump. AMD is actually down from October 2024, is down 40%. Isn't that crazy? And that's after they ramped their MI300X and now doing MI325, then they have MI350, MI400, etc. And some of these products actually have more memory than the NVIDIA counterparts that are coming out for the same year. So, I mean, memory capacity and memory bandwidth are different things, but they seem pretty competitive to me. I don't know. So, and with cloud services growth from Microsoft, Amazon, and Google, kind of underwhelming. I mean, Google's year-over-year revenue growth dropped from 35% to 30%.
It definitely is like a stock picking market. Like if there's going to be a time to buy individual stocks or short individual stocks, I feel like now is a great time to do it. Um, it does seem like sentiment, like overall broad market sentiment, is not nearly what it was like in 2021 or so before we had the big drop in 2022. So it seems like we still need, um, unless like market structure itself starts to fall apart or there's like some sort of supply shock somewhere. It seems like we would need uh, a a move up before we get any sort of meaningfully move down. Like it seems like people are very hedged quite a bit right now.
Okay, Stephen, right now the 10-year yield is at 4.5%. Do you think we're going to see 5 or 4% next?
5.
Oh, no way. Come on. Bill says that the 10-year yield is headed down. It can't move up from here. Or let's say the budget deficit can't grow from here because the ceiling, the budget or debt ceiling is not moving up anymore. So until they pass a resolution to increase the debt ceiling, which I don't think they're going to do anytime soon, the budget deficit can't grow. What do you think? Looks like they're going to balance the budget sometime soon.
When there's no room for nuanced takes that are in the middle. Like nothing, we've seen that in politics where you need to have a very strong opinion on one side or the other, because if you have like a nuanced take that kind of winds you up in the middle, you end up not saying anything.
Mhm.
When does this debt ceiling, like when's the timeline of that end?
I don't
When's the
know. There's
next?
just so many ways they can apparently work around it. Is that, let's say, 6 months?
So basically, Bill saying that the 10-year can't meaningfully rise for the next 6 months.
Yeah, that's what he said. I mean, he called the top on these yields like last month or so. You know,
Yeah, I mean, I don't see any signs that inflation is continuing to tick down. Like it seems like most measures show that it's flat. Um, I wouldn't count like some of the market expectation ones that are survey based. It seems like we're kind of settling into this elevated level of inflation. Some would argue it's not too bad to actually keep this, and they'd rather have this level of elevated inflation versus the mid 2010s when we couldn't really get inflation above 1 or 1.5%.
how many deliveries do you expect for Q1 for Tesla?
390.
Wow, below 400,000.
Yeah,
Actually,
probably.
I bet someone last month that it was going to be below or under 450. Can you believe I got that coffee bet?
Did he at least give you like decent, or was that like straight up even money odds, or was it
Straight
like
up, even
four to
money,
one?
even money. Yeah, yeah, it's crazy, right? This is a short-term trader though, so I'm not surprised.
Do you still expect them to lose money in Q1?
Yeah, I think it's very possible.
Is that
I
a
would
coffee
think.
bet?
Um, and Q1 delivers below 450. I think what's his name? The Booster. I think is the. I also bet someone Robotaxi miles in 2025 more than 1 million. Somebody took it. I took the. I don't think I've ever lost a coffee bet betting against these timelines. Honestly, I should just stick to my uh, bread and butter.
Just basically do the opposite of
Seriously,
what you did
whatever
2 years
Elon
ago.
says, whatever exactly, whatever Elon says, just put out that same quote and say the other side. Take the other side, and then especially do it as soon as he says it. There's going to be a lot of people who are hyped on it anyway, so somebody will take the bet. I can actually turn this into like a legit six-figure income.
Yeah, I haven't. You'd have to see what the markets look like on like Polymarket and such when he or any like the other prediction
Nah,
market.
there's
I don't know if Kalshi or anything like that. What the pricing
there's
of that stuff looks
there's
like,
only a
but
couple of market here. Um, Now, are they going to lose money in Q1? I mean, if they deliver less than 400,000, I don't see how they make money, honestly. They may have had previous quarters where they delivered before, below 400,000, but that's when, they weren't offering these 0% or free lifetime supercharging or, um, Cybertruck is a difficult one to produce. I don't know. I think energy can keep them kind of afloat for a little bit.
Don't you expect ASP to rise this quarter though?
This quarter,
With the launch of the new Model Y?
but that's not going to be any meaningful volume this quarter, right?
How many?
I don't know. I don't know. It's supposed to be starting in March, so I doubt that's going to be any material volume. And they just did a bunch of deals in January to clear out the old inventory too. So, um, I don't know. And Troy says more than 100,000 to produce a Cybertruck, and they're now selling them for less than 80,000. So that's like that could be a money loser for them. So right now in Q1, it was in Q4 according to Troy. So
Yeah, and he does make a good point, and I wish we could have gotten a question from management on it, or an answer from management on it. He argues that the reason that COGS have been declining is mostly because of mix, which I
right,
think
exactly,
is a pretty valid claim to make.
exactly,
But
exactly. Do you think manager's going to answer that question? Give me a break.
no,
ACDC.
Yeah, yeah, man, not to change the topic, but I just saw a passing headline about the jobs numbers and in the details of the job numbers, and I would love to get Steven's input also. But 99.2% of the new jobs last month went to foreign-born workers. So that's a huge, huge number. And I'll try to pin it up here. This was the breakdown by Zero Hedge done on it, and this this kind of paints a completely different picture on what the real job market looks like. And if we start and keep ramping up with these immigration efforts, this could also change the optimism that people are seeing in the jobs market.
Yeah. Okay. We talked about Palantir. We talked about Tesla, Nvidia, um, consumer sentiment survey. X spaces are no longer recorded. The recordings are available for subscribers on the spaces. If you want to listen to the X spaces, you can go to the YouTube channel recording there. Let's see what else. So, Steven, you said Tesla stock won't see 250 this year?
yeah, I don't think so. I think that's a good. If I was given even money on that, I think it's good bet, good odds to take.
Um, well, I mean, right now it's 365. Okay, so even money, that's where the stock price is. That's the even money odds right there.
I know that's why if you're offering when I heard 250, I was like, I'd take that.
I offer that for ACDC. So
Oh
for you, I'll offer 300.
no, I mean
250 target, 364 current price, split difference, call it even number $300. You take it?
no, that's not 250. I mean, Tesla's historically always been a very volatile stock, and I think people are like very quick to try to pin what they think levels are that'll hold or levels that'll like stop at on the upside, and I think both sides are usually pretty wrong on that. Um, I mean, who knows? Tesla can do what basically Tesla will continue to do whatever it wants, and I mean the long-term option prices continue to show a lot of volatility. So
Yeah. Let me see if there's anything else I want to talk to you about. We talked about housing. Do you now think home price will drop this year? I mean, your boy seems to think so.
Um, I think we have a coffee bet that I don't think they'll drop more than 3%. So, um,
Mm,
I mean, maybe they might drop a smidge. Like, I wouldn't want to hang my hat that they won't fall like 1%. But um, yeah, we continue to need more inventory though. Inventory is still historically low.
okay. All right. I think that's it. ACDC, anything on your side?
Just would love to get Stephen's take on the jobs breakdown.
Zero Hedge historically is good at cherry picking all sorts of data points. It kind of reminds me of when inflation was surging. People had these really creative calculations that if you stripped out all the stuff that made inflation go up, that it actually there was no such thing as any inflation in the economy. And I think that's what people are kind of doing with some of this jobs data too. If you like really pick it apart, you can kind of tell whatever story you want. So like in this example, is there a bunch of foreign born people that are taking the jobs this month? I mean, yeah, maybe, but what did that series look like last month and historically and stuff? I think the stuff that matters is that the economy continues to add jobs. Um, and as Yaman pointed out, that number can be historically volatile. Like they make big revisions to it every month, at least for the first 2 or 3 months, and then they make yearly revisions. So this data could be revised by another 100,000, either up or down over the next 12 months. But you can't really fudge um, the wage price increase data. So that's usually a lot more accurate, and it shows that wages continue to grow at 4%, and that's like a very healthy clip. So until we see like wage growth data falling or something like that, or even unemployment claims jumping on a week to week basis, I think the economy continues to perform really well.
Yeah. Yeah, exactly. Exactly.
Right, but 99.2% of the jobs going to foreign-born people doesn't seem like something that can be fudged.
Well, what was it last month?
It was pretty high. It's been high. I don't know the exact number, but a lot of the job growth has been shown increasing because of foreign-born workers. But I've never seen a number like this. So, I mean,
So I got a question then. If they revise during the March, or it'd really be the February unemployment data, um, if they revise January's numbers up by 50 or 100,000, does that mean that it's like the percentage stays the same?
well, if they were to revise that, yeah, I mean, it could go down. But let's say even if they revised it by 100,000, then 99 goes to 90%. But that still seems like a pretty high number. I'm just trying to understand, like, if we start enforcing strict immigration, which Trump has kind of promised so far, these jobs could start to go away, and it could paint a pretty bleak picture for the jobs market.
Yeah, I mean, I think if that was the case, we'd see it in the inflation data, and we'd see it in like the vacancies and the open and quits report, the JOLTS report that comes out. Um, and I don't know, I don't see it. So I guess the the weekly unemployment claims is usually some of the best real time data we get as far as like jobs and things like that goes, and we still don't see a big jump in weekly unemployment claims or anything like that. So
Yeah,
if
that's true.
if Trump cracks down on immigration more, like maybe there'll be an uptick in openings and stuff like that that people are trying to find. If anything, that wouldn't necessarily make the economy worse. I wouldn't think it just mean that it's harder to find workers and stuff. And honestly, the timing, Trump might get really lucky on the timing, right? As construction workers and stuff like that are headed for a slowdown because multifamily units are completing. Maybe that's the time that, um, yeah, something happens. I don't know, but predictions are hard, especially about the future.
All right. Okay. So UC hasn't changed his tune, um, but he says that he's noticed a bit of an interesting trend with these stocks pumping and dumping. I don't know. UC, what do you think about the fact that delinquencies in the subprime loans are going up for all the loans and credit cards?
No change in view. I mean, those have been going up for I want to say at least 6, if not 9 months. I think we were talking about this last summer. Um, we still just have a ton of Americans that have super low fixed debt costs and rising wages. And if you have tens of millions of Americans that have locked in 3% mortgages and their wages are growing at 4.1% or whatever the latest wage growth data says, I think that that puts the average American in a pretty good spot.
Okay. Well, on that note, thank you very much, everybody, and enjoy your weekends. We're going to have a subscribers only space at some point this weekend. I will let the subscribers know, probably same time on Sunday. Actually, no. We have the never mind. We have Super Bowl, but I'll figure some time and then we'll have a subscribers only space. If you're on YouTube, please hit the like button. Take a moment to hit the like button. Trying to grow the channel and appreciate your help. And thank you for being here. Take care, everybody.